Yeah, and I've talked about the same thing. If debasement is one of the things, and then as you say, there's a rolling recession around various businesses or total disruption going on, then you're going to need an anchor in the storm. You need something, and Bitcoin has been the most phenomenal answer. I mean, I've been talking about this for a very long time now, 10 years, and it's been the best single way of not only avoiding the worst elements of the disruption and the debasement, but also creating wealth.
Bitcoin's a hard story to give to Americans because there's other alternatives of what you can buy. You can go buy Nvidia, you can go buy the Qs, you can go buy whatever you want, and that stuff's going up. In countries like Argentina and Brazil, where you can't trust the bank, you can't trust the government, you can't trust the FX, well, they don't have another option.
The global economy is being fundamentally changed by inflation, which is subtly gaining more sway over markets worldwide. Despite tremendous obstacles, central banks persist in providing liquidity to the market. Yet, this has led to the gradual depreciation of fiat currencies. Macrovisionary Raoul has been monitoring these changes closely. According to him, traditional assets are gradually losing value rather than experiencing a sudden and catastrophic economic collapse. Paul believes that cryptocurrencies, particularly Bitcoin, are a crucial answer in this changing financial environment. In a world where inflation is eroding cash and bonds, he thinks Bitcoin is an essential tool for maintaining and creating wealth, not merely as a hedge. After more than 10 years of data collection, it is clear that Bitcoin has performed well in times of economic turbulence, providing investors with a dependable option to protect their wealth. In this video, we'll examine Raoul's most important observations about how inflation is influencing markets and the reasons why Bitcoin can be the rescue you require in these unpredictable times. Make sure to like, subscribe, and enable notifications for further in-depth analyses of the finance and cryptocurrency industries. Let's get started.
The other reason I think that we can't is going back to your point about what the credit cycle is. Normally, it's the collateral has fallen in value, and therefore there's a calling of the collateral for the debt. Now, if you debase currency, you optically don't let the collateral go down. So therefore, you can't have the mass deleveraging. And this drives people bananas because they want their crisis, they want the comeuppance. I'm like, you're getting it by a debasement of 8% a year via global liquidity. And so that's like a put option on the system because it stops the system imploding. So it's it's a trade-off. Yeah, and I've talked about the same thing. If debasement is one of the things, and then as you say, there's a rolling recession around various businesses or total disruption going on, then you're going to need an anchor in the storm. You need something, and Bitcoin has been the most phenomenal answer. I mean, I've been talking about this for a very long time now, 10 years, and it's been the best single way of not only avoiding the worst elements of the disruption and the debasement, but also creating wealth. Yeah, I think we do differ on that. I still think headline inflation comes well below 2% and core inflation comes down as well because of the lagging effect of the rents. And as soon as you start lower mortgage costs, it actually bizarrely lowers inflation for a while. In 2016-17 crypto cycle, we didn't get a liquidity boost from the US. They were trying to hike rates and they stopped because the Chinese said, whoa, stop. Right, remember, Same shit was going on. Oil price was collapsing. Everyone was like, no, stop this. You're destroying everybody. So the US just stepped aside, didn't really add liquidity. And the Chinese did this again and added as much liquidity as possible. And the Europeans and the UK, after the Brexit, flooded liquidity. So you don't actually need the US because, as you rightly point out, Chinese liquidity is a big deal. So the question about that I want to ask is the property sector. Okay, so let's assume the Japanese will allow Eurodollars to get into the Chinese market. Let's assume there is some reparation. It doesn't yet feel big enough for the property market. I get your point of the real estate market, but the property market is like, it's a dead weight. Do you think there's more to come? Is this the Draghi moment or not?
Breaking down the current stage of the business cycle, Pal highlights which markets are in position for a robust rebound. Pal points out that the US dollar typically declines when the economy strengthens, which benefits small-cap stocks, commodities, and emerging countries. These industries frequently suffer during downturns as investors move to safer assets, but once the recovery gets going, they usually recover. In the same interview, Jordi Visser emphasized Bitcoin's rising prominence. He pointed out that more millionaires are being made in the crypto space than in traditional markets. Bitcoin's resilience is remarkable, even hitting new highs during bear markets. Visser also highlighted its significance in countries like Argentina and Brazil, where distrust in banks is high. At recent developments, like the introduction of Bitcoin ETFs and the growing role of stablecoins, show that digital currencies are gaining broader acceptance. Let's dive deeper into the Raoul Pal and Jordi Visser discussion, exploring their insights on these trends.
You've laid this out so many times for so many years about why Bitcoin is so attractive. You were there way before me. The more time I spent on it, the more I just realized that the anger I was listening to and all the problems of the bottom 70% live paycheck to paycheck. There's more millionaires created inside Bitcoin every year than there is in the stock market, yet the stock market goes up a lot. Like,
really? Is that the case?
Yeah, I mean, millionaires are being created in Bitcoin at an insane fast pace. And again, you and I have talked about how many owners there are in terms of wallets and how they kept growing. I'm actually astonished at how many macro people still either don't own it or say they've missed it. When I just sit there and I'm like, do you realize that we had a complete bear market, like a dot-com bubble that unwound in the crypto market, and Bitcoin made it to all-time highs while that other stuff is still sitting at zero, most of it. Bitcoin's a hard story to give to Americans because there's other alternatives of what you can buy. You can go buy NVIDIA, you can go buy the Qs, you can go buy whatever you want, and that stuff's going up. In countries like Argentina and Brazil, where you can't trust the bank, you can't trust the government, you can't trust the FX, well, they don't have another option. And that's where Malay was. And Argentina's got a rich history of being a place that's loaded with commodities, loaded with sophisticated commodity traders, but just hasn't been able to get out of its way. When I moved to Brazil in 1997, from 1986 to 1994, they had 5 currencies. So they constantly had to tell a story about what was happening. Bitcoin is happening, and it is a replacement for all people below the wealthy in their FX for exactly what you said, which is the reason the Brazilians had to keep changing their currencies was because the debasement was happening with hyperinflation. This is not hyperinflation. This is a slow default on the debt that's happening through debasement. And the people that are getting the most angry are the people that aren't part of the top 1%. And what's happened this year in Bitcoin, not just Bitcoin and stable coins in particular, to get the ETF launch happen to where you had 100 and change % run up leading into the event. And it still went higher in the month after. And now it's consolidated for the last 6 months.
Yeah.
That's a good sign when you have a major event like that everyone was looking for. You've had politics where they've had bipartisan issues that have made it through Congress. You have the accounting change, which comes into effect, the FASB change, which comes into effect for ownership, for people who want to have it on their balance sheet and how it gets marked to market. The stablecoin growth and the fact that Terra Luna blew up. You had all these blow-ups, and yet stablecoin growth, they're now the 16th largest treasury owner in the world. Digital transactions, as I mentioned, is something people should really read the McKinsey report on digital payments. Digital payments around the globe are going higher. And in other countries, it's an accelerating fact that they're using stablecoins more and more and more. And stablecoins will be the connection. So don't think of Bitcoin as an exchange of value, but think of stablecoins, and stablecoins are within the ecosystem of Bitcoin. So that absolutely is going to be there. The other part is, I do believe in the deflationary side. There's no way that the blockchain isn't the most deflationary. When you get rid of the middlemen, you've been able to reduce the cost of everything. And so the easiest way for the middlemen to be reduced is obviously through smart contracts. The smart contracts should be done through AI agents. So if you buy a home, theoretically, all of those phone calls you have to make to your lawyer, to the insurance person, to all of these things, they all end up being money. They all end up being time. If you buy a house and the AI agent goes and does all of those pieces, You've now taken the cost down dramatically. You've eliminated most of the middlemen. That is going to be what's next, and that just leads to more need for the blockchain.
Lastly, Jordi Visser highlighted the incredible wealth creation taking place in the Bitcoin ecosystem, noting that the number of millionaires generated in Bitcoin each year surpasses that of traditional markets. He expressed surprise that, in spite of Bitcoin's ability to withstand market downturns, so many macro investors still haven't adopted it. While many other assets stagnated or lost value, Bitcoin managed to reach new all-time highs even after the big crypto bear market. Additionally, Visser emphasized the significance of Bitcoin in nations such as Brazil and Argentina, where citizens have misplaced trust in governments, banks, and their own currency as a result of hyperinflation and depreciation. Bitcoin provides an option in several areas to guard against economic volatility. He pointed out that although Americans have many options for investing, individuals in these other nations have few, which makes Bitcoin an essential tool for surviving financially. Jordi Visser made the point that people in fragile economies with little faith in established institutions are finding that Bitcoin is a lifeline, not just for the wealthy. The rise of Bitcoin, together with the growing use of stablecoins, offers a clear picture. Digital currencies are no longer a fringe idea. They are becoming crucial for millions throughout the world. The impact is evident and ranges from wealth generation to inflation protection. The financial world is evolving quickly, and being knowledgeable is essential to succeeding in it.